And a lot of people even make the mistake of thinking simply hiring a tax attorney is going to somehow subject them to an audit. And I always joke that, you know what, you're giving the IRS a little too much credit there. It's not to insult anyone at the IRS, but they have their hands full and they have, algorithms and checks and balances in place for a reason because drilling down to that level, it's not realistic to think that. But that's also where the proactive nature of tax planning is beneficial and starting early is because if you are documenting that throughout the year as it's happening in real time, you're really creating that audit file and you're creating an audit ready deliverable. That's what we're always working towards is that documentation and having that ready to go in the event you do unfortunately get selected for the lottery that no one wants to win, which is apparently the audit lottery. So preparation in advance is key.
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
Welcome to the Owner's Profit Playbook. This is Pat Mancuso. I am the host of your show, and today we have an amazing group of gals. And I say group because there's more than one. And what we're going to talk about is we're going to talk about the hidden tax leaks draining high earners and business owners. And I know you won't be disappointed in the content from today. So let's start off with, first of all, we're going to talk about, we call it the opening drive. And as you know, if you've listened to our podcast before, we kind of have a sports theme in what we do. So the Owner's Profit Playbook is the show where we uncover what business owners and high earners don't know. That's costing them commas and zeros. And if you follow our show at all, that is our theme. What you don't know is costing you commas and zeros. Today, the conversation is about one of the biggest and quietest profit leaks there is, taxes. Not because people are doing something wrong, but because most people never are shown another way to think about the system. I'm joined today by two amazing, they almost look like twins, tax attorneys, Ashlee Hall and Mary Lundstedt. They're co-creators of Tax Planning, a podcast that's widely followed on LinkedIn Space, where tax professionals, where they break down the real tax law developments and how the system actually works. Full transparency, I am a client and an advocate of theirs. What makes their perspective valuable is they work at the intersection of tax strategy, compliance, and taxpayer rights. And the more efficient and accountable they are and they can be, certainly their interaction with the IRS is helpful. Today, we're going to unpack where high earners and business owners unknowingly lose money and what happens and how that awareness alone can change the outcomes. So Ashlee and Mary, welcome to the show today.
Thank you. It's good to be here.
No, we're super excited. And I know the feedback from our episodes, anytime we talk about taxes and business owners and high W2, that's really hard to say sometimes. High W2 wage earners, I know that people are excited. So you both spend time translating tax law and advocating for taxpayers. From that vantage point, where do you see high earners and business owners getting tripped up most of the time?
I'll start off if you like. I'm going to take it to a really high level to start with. And it may sound somewhat self-promoting, but after doing this for 20 plus years, increasingly, I believe one of the reasons high earners are falling through the cracks, so to speak, they don't keep a tax attorney around like they keep a CPA around. So everybody has a CPA, they're there,
Right.
but they come to a tax attorney when there's a problem. And you would save money, trust me, I've seen it, in a couple of ways if you had the foresight to have a tax attorney on hand like you do a CPA there. You may very well optimize tax benefits because tax law, like all law, is ever changing, and it's the tax attorneys who are following that. CPAs are wonderful, they have a different skill set, but tax attorneys can help you right off the bat at that level. And then two, they can help you avoid some of the big problems that are costing you money. So like I said, I know it's a high level thing, but it's a trend I wish I would start seeing more of. I do think the recent, if any of the listeners remember the employee retention credit, really should be a glaring prompt emphasizing, making you stop and think why it's so important. Have a tax attorney around.
Yeah. And you guys both know we did a good amount of work in ERC. And, the interesting part of it is that code and the guidance changed so many times, it would make your head spin. And so, it's important that people who, like you guys, follow that on a daily basis. It's important to be able to support the business owners. So Mary, I mean, you nailed it there. In I would also offer this to see your guys' perspective on this. Everybody has a CPA, and we're not, downplaying CPAs. We never do. But I always ask this question of business owners every time I have an opportunity to talk to them. I say, when was the last time your CPA, your accountant, your advisor brought you a tax strategy, a tax planning opportunity? And the answer most of the time is no. So it's not just having a CPA or an accountant, but really it's to have a CPA or accountant who is fully engaged in all the changes and understanding the business owner's business or the W-2 wage earner, high wage earner. So would
Yeah,
that be a fair statement from your guys' perspective?
I was gonna say
Yes.
that's a great point, and it's a common misconception with that CPA relationship that I see from the taxpayer or client's perspective is that the CPA is somehow, has time to not only digest new tax code and keep up with the traditional compliance deadline schedule, but that they're somehow working behind the scenes throughout the year trying to identify tax mitigation strategies for their clients, and they just don't have time unless they have a dedicated service line within their business, which some of them do. A lot of CPAs are kind of moving towards that tax strategy, tax planning model.
Right.
But at the end of the day, they're always going to have those compliance deadlines kind of hanging over and governing, how they have to operate their business because it is very cyclical, as you know. And so that kind of leads me into what I was going to mention about what I see self-employed or high W-2 earners, mistakes that they make is thinking that tax planning only happens at year end or in the fourth quarter. Yes, we see an influx of people saying, oh no, it's November and I didn't do anything, or it's December and I didn't do anything. And it's not too late at that point, but we only have a few Hail Mary strategies. So
Right.
why not start at the beginning of the year? And now is really a perfect time to address this. I think this episode is probably going to be very timely for many people because we do have the full year, not only to discover, we start with discovering what is going on, what they're missing out on, and creating that tax plan, but also the implementation, which really has to happen throughout the year so that it can be fully documented in the event of an audit, or if the IRS wants to look closer at something.
Right. Well, ladies, one of the things that my passion, a little bit of background as I've been an entrepreneur my entire life. I've owned multiple businesses, exited, built, scaled. And when we got into the world of tax credit, starting with R&D, one of the things that I discovered was that, well, and Ashlee, this validates both what you and Mary have said, is that it's kind of like the brain surgeon and the general practitioner. They both do great work on human beings, but they don't do the same work. And it was shocking to me through the R&D and the ERC process. And, as I was educating myself, I was finding that a lot of CPAs either didn't have the education, they didn't understand those programs, or they took a position on them that wasn't based in code or guidance. It was based in opinion that, really was more of an opinion like, I don't want to have my client get audited, versus understanding, what that client could possibly take advantage of. And the reason that I bring that up, and so I want to make a transition here to the next question, is I think there's a problem in the CPA accounting world, and it's not the problem of the CPA or accountant. It's just the world they live in, and there's not a proactive approach to consulting business owners to help them. You talked about what happens at year end or tax time, and if they had a week for Hail Mary strategy, sometimes that's a lot of time. So based upon what we just talked about, what do you think people misunderstand about the difference between tax filing and tax mitigation?
Well, so the difference, the way I describe it is tax mitigation really occurs proactively. And so with compliance work and tax filing, that's looking backwards, right? So that's
Right.
recording history. And so that's really the biggest disconnect, I think. And so I'm glad you're talking about this, because I have to have this conversation, I feel like, all the time to explain why why tax planning is truly different than tax filing. And it really comes down to the proactive nature of it, and not just recording history, which obviously has its time and place and is important. I was just saying that's one of the biggest disconnects that I see, and things that, something we have to explain all the time to clients, the difference between tax strategy or tax planning and tax compliance or filing. And that, the planning aspect is truly proactive. It's saying, okay, what are we leaving on the table? Let's look under the hood and really examine either the business, or even if you're W-2. And that's another common misconception, is that there's not, strategy for W-2 earners. And there absolutely are strategies out there, as for those who are not self-employed. They're, working for someone else, paying taxes through their payroll withholdings. There are absolutely things that those individuals can do as well. You do not have to have a business to plan. But again, the biggest distinction, I think, or common misconception is, or lack of understanding, I guess, comes with the proactive nature of planning versus recording history with filing tax returns.
Yeah. And I think another, maybe a smaller difference, but something, a characteristic or the nature of the two that's distinguished, involves planning always has an element of, an unknown, something that a forecast, right? Planning has a grayer area or color to it. And so I feel like tax attorneys are already trained in the gray areas of law. We have that sort of instilled in us in our training to navigate a little more confidently
Right.
than someone who's trained to be in more of a predictable, there's still risk of making errors, and in filings, things can go wrong. It's very serious. But the tools are there. You see what's in front of you. It is what it is. Like Ashlee said, it's a reconstruction of a historical record in a way. You don't necessarily, you may not have that familiarity or comfort level with the risk element that appears in the planning world to some degree.
Right. Well, and you bring up, I read a great book, Tax Free Wealth by Tom Wheelwright. He's the CPA out of Arizona, and it was really directed towards business owners and high income wage earners as well. But basically, there's a risk spectrum, right? And people will ask me, and of course, I'm not an attorney, so full disclosure. However, they'll ask me, can this be audited? And I have this, kind of common, funny response, and go, anything you submit to the government can be audited. And the fact of the matter is no one can control if the IRS is going to have questions. But what also happens is there's different levels of audit, in terms of, like an IDR, which is information document request, as you guys know, and that's just basically government wants a little bit more information based upon what you supplied. Yet the word audit just freaks out people, right? And
Yeah.
so, and yet, again, I've always been told, you guys, is that if you're preparing for the audit as if it's going to happen, then you're generally prepared if it happens, you know,
Right.
Right.
so that,
And what you're describing is, at least what they taught me, they call it the audit lotto or lottery, right? Anyone can be audited. So
right.
you're right. Yeah.
Yeah, and a lot of people even make the mistake of thinking simply hiring a tax attorney is going to somehow subject them to an audit. And I always joke that, you know what, you're giving the IRS a little too much credit there. It's not to insult anyone at the IRS, but they have their hands full and they have, algorithms and checks and balances in place for a reason because drilling down to that level, just it's not realistic to think that. But that's also where the proactive nature of tax planning is beneficial and starting early is because if you are documenting that throughout the year as it's happening in real time, you're really creating that audit file and you're creating an audit ready deliverable. That's what we're always working towards is that documentation and having that ready to go in the event you do unfortunately get selected for the lottery that no one wants to win, which is apparently the audit lottery. So preparation in advance is key. Otherwise, you've seen, and Mary and I have seen with the ERC how hard it is for business owners now to think back several years, in history. Things have changed, personnel changes. They may have sold their business at this point and they're being audited by the IRS on their ERC claims and having to try to recreate history and remember all of those impacts and what government orders they were following. So documentation in real time has been a huge lesson I think we've all learned with ERC.
And absolutely, and I'm sure you'd validate this, but I've always been told from day one as a business owner, it's always better to have an attorney engage the IRS on your behalf versus you attempting to do it on your own. And so, I know that that's, your guys' perspective as well. And certainly I've experienced that. So let's kind of shift gears a little bit and talk about how we see what I call profit leaks. So most of the financial pain I see doesn't come from aggressive behavior. It comes from assumptions. So let's talk about some of those. What assumptions quietly cost people the most money from your perspective?
Assumptions, I would say what we talked about a few minutes ago, which is making the mistake that or making the assumption, I guess, that there are no strategies for high W-2 earners, that it's only reserved for the self-employed, and that's just not true.
Yes. So is there, and again, it wouldn't be putting a strategy out there may not apply to across the board a high W-2 wage earner, but is there one example that just in general nature you could give that somebody, if they were to go, well, what would that look like? Is there one strategy? I mean, I know there's some, but I want to let you kind of respond to that.
Yeah, there are several different strategies that would apply. I would say there are quite a few tax alternative investment options. There are investment tax credits. I know solar is kind of hot right now, given the changes in the law and kind of where that's trending. But then we have other tax credits to sort of backfill that market. And so, but I've also seen some really bad strategies out there.
Ashlee, you shared some great potential strategies, and there's many, but is there also some strategies that maybe people shouldn't necessarily look at because they're very high risk or maybe even not even legal?
Yeah, there are actually some strategies right now that are under high scrutiny from the IRS, which one that comes to mind is there is a charitable LLC strategy. I think it got shot down years ago, and then it sort of resurfaced in maybe a little bit of a different format or structure, slightly different structure. And, if it sounds too good to be true, it probably is. Mary and I spend a lot of time fielding inquiries from other professionals that find these strategies and they want us to do a deep dive and do the due diligence to see if we can get comfortable with it from a tax opinion standpoint. If the promoter of a strategy is not a tax professional, and there's not a tax professional involved and there's no tax opinion, those are red flags. I would say, I would also warn people to not assume that just because a strategy itself has a tax opinion attached to it with the documents you receive, that does not mean that that tax opinion carries any weight with the
Right.
IRS for your individual tax situation. And
Right.
so that's also an important distinction, but it's sort of,
Yeah.
caveat emptor. But to Mary's point earlier, having a tax attorney at the ready that can field these inquiries and help you filter out what's real and what's not, and assess those levels of risk based on your situation, I think is key.
And I would add, it's again probably a little more high level thinking, but so relevant in our times. Something that's really dangerous right now, and I'm seeing people try to utilize it in this context, is the rise of AI, right? So people without the benefit or support of a tax attorney or anyone really, sometimes they will go to AI now and ask them for tax strategies, basically, and how do I do it? And some of what I see and hear about, it's alarming. So this is a new world we're in, and it's pretty scary. And then I guess it kind of reminds me to your question of some risky strategies right now. Actually, and it's kind of weird because AI is on the rise. Technology is at the forefront of everything right now. And in fact, one I would say to people out there to be careful with is anything that combines charitable and IP right now. That I would say that's on my list of I'm seeing it too much, and it's not a good combination usually.
Maybe we need a tax planning dirty dozen, Mary.
Yeah, I think that'd be
Oh, I
great.
like that. I love that. Um,
Yeah.
one of the things that most people, you said something and it triggered because I know you all do this, and great tax attorneys and people who work in this world like you do. You actually go to the IRS and you have resources there on some of these strategies that you can go, okay, what basically what's your thoughts on this, IRS, and you get feedback on this. I mean, I'm oversimplifying, but is that accurate?
Um, yeah, that is accurate, I would say. We have a different perspective, I think, just having, we're so heavily involved on the tax controversy side. And then also with our connections, yes, we do have people that we have great relationships with on the inside, as they say. But yeah, I mean, I think that's an accurate statement.
Yeah.
So, what are the biggest defensive mistakes you see over and over? Just curious.
Oh, well, I mean, the first one you already mentioned, Pat, trying to, if it's a sophisticated matter, especially trying to go at it alone against the IRS.
Yeah.
I don't recommend that. Defending yourself against the IRS is it's challenging, it's stressful, it's intimidating, and it can actually get very adversarial and intense. And I mean, I can say there are examples even where, so I know a client has been unfortunate in an audit to misspeak, use the wrong term, and it sets the stage for the IRS to run with it in the wrong direction. And it's very hard then when they engage us, it's that much harder to unravel that tangled mess. And what could have been resolved for a fraction of the stress and outlay of resources is magnified however many times. So that's probably the first thing, is as a defensive misstep is make sure you have a tax attorney by your side, in my opinion.
Yeah. And also, your tax attorney should not put you in front of the IRS unless it's absolutely necessary. So we try to control that to an extent as much as we can. Sometimes it's inevitable that the IRS does need to interview the taxpayer for whatever reason, but if we can control that narrative, that's always better, because everyone has the best of intentions. But what taxpayers don't realize a lot of times is that with the IRS, it's guilty until proven innocent. So really the taxpayer has that burden to shift, you have to shift it then back to the IRS, which if you have a poorly trained agent at exam, it's almost impossible. And so having someone experienced to fight for you, knowing, hey, you know what, we're not going to get anywhere with this agent because they just fundamentally do not understand the law or the guidance. You invoke additional rights and you escalate it, and you know the proper channels and where you can maybe get the case in order to get a resolution and get somebody knowledgeable on the other side. So I think that's key, as well as people make the mistake of thinking, well, the IRS is telling me this, it must be true. We educate the IRS almost on a daily basis in our conversations with them, because, and it, again, nothing against the good people that work at the IRS, but they are trained in a certain way, or there's lack of training. They're stretched thin right now. There's been so much upheaval and changes within the IRS that it's almost impossible for them to stay on top of the training and everything that's needed right now with all these changes.
Well, that's such a huge point on a couple of perspectives. First, the changes get magnified in their world, right? I mean, when you apply changes to a business, that's a specific business, a specific variable. And in my world and dealing with the resources that we have over the past 4 to 5 years, I can't tell you how many times I've heard from the attorneys that, I had to coach the IRS, appeals officer or whoever they were talking with, which again is not a slam on them. It's just a problem with the system, right?
Yeah.
I was on a call yesterday with a client, ERC client, who's been fighting for almost 3.5 years based upon an issue with the wrong tax ID number. And long and short of it, as I said to him yesterday, I said, they're $60,000 the IRS is asking for. Oh, by the way, they already paid the $60,000 and they're asking for them to pay it again. And I said, you guys, I need to get you in front of Ashlee and Mary, because you're just spending way too much time on this and you're not getting anywhere. So that is the unfortunate part about when you don't have somebody or, a team like you guys, they just spend way too much time on it.
Yeah.
So, let me ask you this one last question before we go on our 2-minute drill. Where do you see people leave money on the table simply because no one has ever walked them through what was available? Like we talked about that a little bit, but where do you see that like most commonly?
It's usually from a lack of planning. They've just not engaged
The
that
other,
part.
sorry, I didn't mean to interrupt you, Mary. Go ahead. I was just going to
I'm good.
say the other area that we didn't touch on, and you sort of mentioned, at least from personal experience, Pat, at the beginning with successful exits, is not planning ahead for exit when you're a business owner. It happens all the time where we have referrals from other professionals or business owners come to us, and either they're closing at the end of the month and selling their business, and they want to know what they can do to make it tax-free or tax advantaged, or they come to us after the fact and they're like, hey, I'm going to have this huge gain this year. What do I do? Well, there are a few things we can do, very few after the fact, but maybe only 1 or 2 that I can think of. But, if they come to us 12 to 18 months, even 2 years in advance, knowing that this is the target, this is the end goal, there's a lot we can do and plan ahead for. So I'd say exit is a big one where I see money left, on the table where, you could make it either tax advantaged or even tax free in some cases.
And that really is a process that starts, even if you're not thinking about selling today and somebody taps you on the shoulder and now all of a sudden you have a $5 million offer for a $4 million company, you're going to probably take it. But the problem is it's almost too late in some aspects to, reduce that tax mitigation as much as possible. So it really is, thinking about what that long-term approach is. Okay, so I'm going to put you guys on the hot seat, and I don't care who takes it. I'd love you both to give me some perspective on this. And these are short answers, no overthinking. I know you won't do that. So, biggest tax myth high earners believe.
The biggest myth high earners believe is that their CPA is
That's what I was going to
doing
say.
proactive tax strategy.
Yeah.
That's what I was
love
going to
it.
say. Yeah.
In fact, that's probably a common myth for high tax earners, mid tax earners, business owners, that
I
my
think so.
CPA is taking care of it. Okay, they're going to get tougher. Oh wait, that was kind of tough, but that's because we covered so much high level already. One sign that someone needs tax planning, not tax prep. I love this one.
For me, it's if they complain that they pay too much in taxes. I will
Yeah.
overhear somebody saying that at a cocktail party, and I sort of find my way over there having a conversation with that person.
I agree. That's the best answer. Mm-hmm.
I want to add this because it just is sticking in my mind. So I get this newsletter from a group of individuals, wealth advisors, and they put this so well. And of course, you all know that I live in Minnesota, and they were talking about how people are complaining about fraud. And they were talking about how the fact of the matter is most of the people that are complaining about fraud aren't going to be able to do anything about the fraud, right? And yet they said, they referenced tax planning and tax mitigation. They said, your one option to other than to complain about the fraud is make sure that you're taking advantage of the tax strategies and the tax mitigation that you can. And I thought, wow, that's a pretty good way to look at it. So I thought I would share that. Most expensive phrase people say about taxes.
Right now, I think in this world, I would say Chat GPT told me to, or something like that.
Oh.
Yeah.
Could you again, my perspective, throwing one in here, could you also say that they might say, well, I don't want to get audited, therefore I'm not going to look at it.
Sure.
Yeah.
Absolutely. Failure to act for fear of
Yeah.
being audited.
Yeah. I always say to people, when somebody asks me a question, I'll say, I'm not going to say no to what I don't know I'm saying no to. So I always want more information. Okay. We covered that one already. Biggest blind spot for W learners. Biggest missed opportunity for business owners.
I just feel like we're going to say the same thing over
It's funny, isn't it? You're like, yeah.
Yeah.
So
I say tax-free exit, missing out on a tax-free exit.
wait a minute. You're saying that they wouldn't have to pay any taxes on exit if they did tax planning and tax mitigation in advance? Is that what you're really saying?
That
Potentially.
exists. Yep, that exists.
If there's one thing people hear that ever thinking about exiting their business, because the one thing that most people do when they exit their business, they realize at that point, which is already too late, that they don't have enough money to live their lifestyle after they exit.
Exactly.
Okay, this one, we'll see if we come up with something different. One question people should ask their CPA, but almost never do.
I want to say, have you talked to a tax attorney about this or something like that?
Oh, self-serving there. But no, I mean, they should be asking more questions. If they're upset about the tax amount that they pay, and I've never met anybody, when you ask them the question, you feel like you're overpaying in taxes, say, no, I don't feel like I'm overpaying in taxes. Yeah, they should ask. They should ask a tax attorney. Ashlee, anything else you'd add there?
Are you afraid of the IRS?
That's a good one.
People would answer.
Because if they say yes,
Yeah,
some people might think, well, you want your CPA to have a healthy fear of the IRS. But what we see more often is an unhealthy fear of the IRS, to where they don't recommend or get comfortable with any strategies. I mean,
Yeah.
I've had a client that their CPA was willing to leave over $500,000 in money on the owed on the tax return because they refused to report this tax strategy, that this was absolutely proper and appropriate. And so we had to find another CPA and get that return prepared.
You know, Ashlee, again, story from my journey. So I was on a call with a tax attorney, with a CPA, with a business owner of a number of businesses, and the CPA made the comment that they had as much fiduciary responsibility to the IRS as they did to the client.
I'm not surprised.
Yeah.
I got off, again, not an attorney, not a CPA, but I am a business owner, and I got off the phone and I texted the individual and I said, "Did you actually hear what they said?" And so I think there's also the fear from the CPA's perspective in some cases, and we saw this in ERC, correct me if I'm wrong, where the IRS took a position that they were jeopardizing the CPA's license in a way if they amended returns. There was some guidance on that, correct me if I'm wrong. And I thought, wow, like that's kind of interesting when the IRS, I don't think licenses CPAs, it's right.
What, right. I mean, they can reprimand. There's an Office of Professional Responsibility, and there are, ethics rules both with a CPA license and a bar license, and then also through being a tax practitioner, as you know, that you have to uphold.
Right.
But the IRS also tends to run fear campaigns, as we've seen. ERC was a perfect example. There are others out there that where that's sort of where I pause and say, you know what, I'm going to dig into that
Right.
because if it's absolute, this is fraud, this, and without explaining the why or
Right.
how, I'm kind of suspect now, or
Yeah.
sus, as the kids say these days. I have
Yeah.
teenagers, so.
Yeah, that is absolutely true. Okay, final question for both of you. If someone's listening right now and they feel like they're missing something but can't put the name on it or finger on it, what would you tell them?
I feel like these questions are hard, Pat.
Listen, I ask great questions.
I think we have trouble self promotion is the
Oh, that's
problem because I
exactly
want
what
to
it is.
say
Yes,
call
this is
us, but
exactly
I
what
don't want
it
to
is.
sound
Yeah,
like a
Oh,
commercial.
yeah.
okay.
Okay, so let's in all fairness, I mean, the whole idea is to help people, right? And so if they feel like they're in a position right now where they've listened to this podcast, they've started asking themselves some questions, how do they get in touch with you guys?
How
Well,
do
then
they?
they should reach out. They should reach out and contact us. So
Yeah, I mean,
yep.
typically we take email inquiries a lot, and then we have an inquiry on our website, which hopefully, I mean, it should be live by the time this airs. Um, and so that's typically what we see is, somebody thinks I've heard I need to talk to a tax attorney or tax strategist, and that's how we get involved. And
Yeah.
we don't charge anything for the initial consultation. We always will do a discovery call and figure out if it makes sense to work together.
Yeah, I'd say don't be afraid to ask questions. Bring it all to the table. Nothing is stupid or, um it's an open table. So bring us your questions.
Well, I love it. And a little bit of a shameless plug because I know you know him. So we're bringing Ed Lyon up to the Twin Cities in
Oh,
March
fun.
to do
Nice.
some sessions for our business owners and clients. And so I know that you all work together, and it's just, I'm so excited. I think, and the timing is going to be good because it's the end of March, and they'll still have some time and even beyond that because it's about tax planning, and tax planning isn't a one-time event, right?
Mm-hmm.
So I figured
That's awesome.
I
Hmm.
figured I'd get the plug in. So, ladies, this conversation wasn't about telling you what to do. It was about helping you see what you can't unsee, because what you don't know is it's costing you commas and zeros. So if this episode resonated with you, subscribe to the show, share it with another business owner or high earner, income earner you care about. And most importantly, start asking better questions. Ashlee, Mary, thank you so much. This was amazing, you guys. It was amazing
Thank
today. So
you.
thanks for being here.
Thank you.
Thank
Thanks so
you.
much for having us.
Yep. Take care, everybody. Until the next time, what you don't know is costing you commas and zeros. So ask better questions. My name is Pat Mancuso. We'll talk to you soon. Take care.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.